Hey everyone, this is Chase with Ethical Trading. I was going to do just a quick walkthrough of some of the charts as of today, September 10th, 2024. Starting here just on QQQ, the daily chart. Still have this head and shoulders going on. I know a lot of people are optimistic that we're going to see a massive bounce on things off these current levels. That being said, tread carefully. Not being bearish, I'm saying be careful because there are some bear setups still going on here, and this is still a downtrend that we're currently in. So first thing, just kind of, if you haven't seen my charts before, it looks busy, right? In reality, it's not. Solid yellow lines are more significant levels of support and resistance. Dotted yellow lines are minor levels of support and resistance used for intraday trading off the 5 and 10 minute, 5, 15 minute, potentially 1 hour charts, because I trade multiple time horizons as well. That being said, the levels of confluence that you see are helpful if you have lines that cross, for instance, on a larger time frame and smaller time frame. That is confluence. That shows you where you may have multiple patterns aligning and more significant levels that you need to watch. So things to watch right now on QQQ. We did break down from the larger time frame downtrend that we've been in. Sorry, uptrend that we've been in. We currently are in a downtrend that we've got going on with the right shoulder here. Draw a trend line just so you can see that a bit better. I'm going to do it on the daily as well because I prefer to draw my patterns on the daily and then work our way down. Delete it and redraw it because it's not playing nice. So you can see we're very clearly still in a downtrend here. People see bounces like this. Just to be clear, this basically is the inside bar daily candle because this previous candle fully engulfs it. You can see here also that the daily candle today, while green, still did not overtake this level. So if you actually jump over and look at SPY as well, a similar setup going on. QQQ is a bit more significant at the moment since that's what is more tech heavy weighted, as well as that's where a majority of our price movement for our bull market the last 12 to 18 months has come from. That being said, I'm always watching both of them as well as the top contributors within both of the indices. So you can see here we still have this bear flag breakdown going on within SPY. It's a bit clearer on the 4 hour and 1 hour charts, but as you can see here, broke down from bear flag, and this is the measured move with bear flag. We haven't hit the bottom of it yet, so we can still consolidate here. Alternatively, we can also break out to the upside here. I'm looking for a break above 550. This is a significant level that I would like to see to the upside to signify that we aren't going to continue in a stronger downtrend. We have CPI data tomorrow morning, so that'll be interesting to see how that influences different things, as well as all the uncertainty with the current election situation. So again, not being a bear, I've learned my lesson the hard way in the past by not hedging my long positions. I'm in long share positions and calls on several stocks, but I also will proactively trade and hedge shorter term against that and trade puts. I'm a trader and I'm in the interest of making gains. I do not have a bias to where I feel like I only have to trade up or only have to trade down. So that being said, there's some key levels. There's a lot going on here. Like I said, there's a legend available over in the Discord that you can see that shows major significant levels of support and resistance, minor levels of support and resistance. The solid purple lines that you see here are gap fill levels that have been filled. If they're dotted purple lines, then they are gaps that have yet to be filled. So SPY actually left several gaps way down here. Hopefully we won't go back to revisit that, but you know how the markets are, so anything can happen. Quickly jump over to a couple of other tickers as well. Let's see, Tesla is a hot one that people are all about trading in. Those of you that know me know I trade Tesla a ton. I'm long shares, but I also sell covered calls against my Tesla shares to hedge my long. So I'll start here on the 4 hour just to show you. So this range that you see here in the orange This is actually the range that I like to sell my covered calls in. I actually sold some October 18th 230 strike calls last week when we were right in this range here, and then bought to close them whenever we tagged right here, or majority of them. I left a couple of them open to remain as hedges. People get really hyped when Tesla starts doing these upside movements, but if you watch the options flows, you'll notice that time and time again, whenever we have these rapid upside movements, the large funds and whales are selling heavily calls into those spiked premiums, right? And then as soon as we get the big drops, they either buy to close or they let the calls expire worthless. So don't be a victim. Learn how to trade both ways, learn how to respect the charts and get in, get out. I'm not saying don't trade Tesla calls. There's nothing wrong with trading calls here. For me, the risk to reward's not worth it whenever we're in this range, because I could have traded right here, and once we got the breakout after that retest, it's just not really worth it for me whenever you've got the 225.40 level that serves as a strong resistance level. Even if it pushes above that, you may get to that 230 to 234 range. If you look at the premiums for Tesla, the IV is so jacked on it that in that range, you're not looking at huge gains. It's just the way the options work. If you're not familiar with the Greeks, there's some great videos out on our YouTube that show you that, but it has to make sense for me between levels of support and resistance to be worthwhile of a move to actually sustain the gains that I would want to make off of that move within the range. And for this range right now, it's just not there for me with Tesla. However, as an option seller, it's great for me because I can sell my covered calls and we trade flat. The theta decay is significant on anything that's within 45 days. That benefits me, as well as we rejected these levels, it's beneficial to me. Key levels that you'll want to watch on Tesla, and I'm going to go ahead and apologize with how busy this is about to look when I show you. But right now, Tesla has been rejecting this weekly time frame ever since the all-time highs in 2021, right? So if you look here on Tesla, it gets these little breakouts above that trend line, and then if you look at the monthly, it almost always rejects back under. So if you're looking at the monthly here, you get these big breakouts intra-month, especially earlier on in the month whenever they're selling the spike premiums before quarterly expiration. And we're heading into that, as you can see here, quarterly expiration, right? The 20th. So right now, when I look at the options flows, which I can show that in a separate video, but when I look on Ortex or on Unusual Whales, I can see the flood of call options that are being sold by larger funds into the spike premiums. What almost always ends up happening on these moves like this, again, prefacing, I am long-term bullish on Tesla and Elon because I like the technology. That being said, what ends up happening is we get these big spikes of movement that gets all the retail traders actually chasing the call options. It's great if you get in and you get out and you don't get greedy about your call options, but the people that get burned time and time again are these people that keep on loading up on shorter term call options, and then we get the rejections, and then theta eats the call options alive. So that's why I started selling covered calls and generating additional income to buy more and more shares over time, because I got tired of being on the wrong side of that. I've been doing that since right in here in 2022. So if you look here, we almost always get the rejection on the monthly. Right now, we're very early in the month. So of course, yeah, you got people that are hyped because that is a green candle above. I'll feel better once I actually see that close above on the monthly chart, signifying a breakout and maybe confirmation on follow through of that downtrend. In the meantime, we're still in a downtrend on Tesla overall. There's a potential inverse head and shoulders here that was invalidated already. It's going for it again. But what we actually have here, if you look from right here and all the way over here, this is actually a bear flag, or bearish pennant, I should say, given this. But we broke down from the bear flag here, and then we came there. We went back to retest the lower trend line to the bear flag and rejected. So typically what happens on Tesla in these setups is that we now consolidate within that given range, and then unless it can push up here to invalidate the trend and the setup that we currently are facing, typically that's where it forms and breaks its next leg down, which you can see examples of here. Okay, same thing right here. Very similar zone. I'm not saying we go down to these lows here, but we are still rejecting off the same trends. So that's enough Tesla at the moment. I can do a separate video that dives into Tesla. Look at a couple of others. So Apple, for instance. Apple's got an interesting setup right now because people really hyped the iPhone release event that we had this week, and pretty much all the Apple events nowadays have become sell the news events. Unfortunate, but it's just the nature of it. So we scalped some puts for nice gains yesterday. We entered a few additional swing puts at the moment, but as of right now, Apple still is not broke above that resistance level. So as of right now, I'm looking for either a break above that or a rejection in this zone here, where we then move lower. This is the measured move from the bear flag that was here that we broke down from previously. I'll remove the lines just for transparency and clarity. But as of right now, this is the levels you'll want to watch on on Apple. Apologies. If we get a breakout to the upside and invalidate this trend, especially if we can push above this 226 level, I'd be looking for a move to scalp calls, maybe between 226, 231, and then this is the measured move if it gets the breakout above 231. It would need a major catalyst there. We'll see what happens with CPI data tomorrow. That being said, it is what it is at the moment. Another big one that a lot of people have been asking about is Google. So for those of you that are already in the Discord, I've actually been tracking this bear flag setup on Google for several weeks now. We actually entered put options here in this zone. Once we got the confirmation of the rejection off that 167 level again, we were trading this on the upside if it actually broke out, but it didn't. So with that breakdown, that is a bear flag / bearish pennant. The measured move for that puts it right around this 143.59 level, which just happens to be where we have a gap from the daily that has yet to be filled. So as much as I know a lot of people are super bullish on Google, and it's one thing if you're a long-term investor, ultimately what you've got going on there right now is a very bearish setup. All of the global antitrust lawsuits are not helping Google's situation. So time being, we're in swing puts. We've already trimmed to secure and cover our cost basis. So as of right now, we're just riding some runners here. I'll be looking for re-entry depending on what the setup does in the coming days and weeks. A couple of others to keep a close eye on. Microsoft. So Microsoft has this concerning setup right now. Again, not trying to be a bear, just simply making it a point to acknowledge all patterns that are visible on the chart. So sure, I could be bullish about the uptrend that Microsoft has going on here, thus why I have this price target if we get a breakout and invalidation of this right shoulder going into the head here. But as of right now, that is a very, very clean head and shoulders pattern. If it pushes above this little line here, it's not invalidated. In order to invalidate this right shoulder, it would need to push higher than this resistance level. In order to invalidate this entire head and shoulders pattern, it would technically need to push above the 467 level. That being said, you might have a good call, short, small situation right there that you could trade. Some call options between that range because that's the all-time high and it can potentially pump solid there if it gets some traction. It'll be interesting as it moves into earnings here. You always want to be really careful whenever you've got a large bearish pattern like this going on heading into earnings. Oftentimes with earnings, things trade flat so that they can burn both sides, but just tread cautiously. We've got, like I said, the election and several other things going on. While a lot of people are looking at SPY and QQQ and feeling very optimistic that this is a bounce and we're moving higher, I'm being careful because I understand and look at the ETFs as the major weighted contributors to those ETFs drive the movement for those ETFs, not the other way around. So while you've got spying QQQ patterns that I've showed you already. What you got here for some of the major contributors is not necessarily a just super bullish setup at the moment. So another stock that I'm currently trading because we saw a big move today to the upside was AMD. So I know a lot of people are hyping AMD, but AMD has been in a major downtrend for a while now, right? So sorry for the pattern being a little funky and hard to read there. If I zoom in, you'll see why those are there. So we actually entered puts to trade as a very, very short-term, quick lotto trade on this. So if I zoom in, you can see kind of what we got going on. So as of right now, the price targets for the breakdown are there, but like I said, we've been trading back and forth in this range. I will move this so it's easier for us to see. And we'll come back to it, but as of right now, we're still rocking in that same downtrend. SMCI is the other one that I've seen several people in the chat asking about. So coming over here. So people continuously buy SMCI for whatever reason at the moment because of the hype with chips and NVIDIA and several other things. That being said, this has been bearish pattern after bearish pattern ever since we did the split, right? Earnings just killed it some more. So if you look here, you've got bear flag, breakdown, bear flag, breakdown, bear flag, or breakdown, right? So again, not being bearish, I am saying as we see it on the charts. So we had bear flag here, we broke down from it again, and moved down lower. As much as people don't like it, they need to be careful here because just because something has dropped this far does not mean it's going to bounce immediately or at all. Intel is a prime example of that. That being said, where we're currently at on this chart is another bear flag after consolidation where we've broken down, and just so happens the measured move of this bear flag is down here at this 352 support. And I know people feel like, oh, we're not going to break 400. Well, guess what? People said the same thing about 500 and 600 and 700. The unfortunate part for SMCI right here is that there is no support really within this zone because it ripped up and left that big space, right? So 352 is the next significant supply zone that we have here. Demand zone. And I'm looking for that move if we break down again here. So we can actually, if we break that trend, likely heading to 352. We'll retag 382, so it's really not that far out of the question at this point. Few others, actually GameStop earnings were an after hours day, and I haven't even looked at it yet. Oh, GameStop's dropping hard. That's no fun. So I'll have to go check and see what's going on with that. Let's see other tickers that people might be interested in. Actually, let's look at Bitcoin real quick. I know a lot of people are into crypto, and then I'll wrap up this video and do some specific ticker requests in a separate video. So Bitcoin, I was actually chatting with some guys this weekend. I was in 200x leveraged calls on Bitcoin this weekend. I entered them right here and trade this breakout. I did lock that position around here Sunday because we were busy doing family stuff. It would have been nice if I would have left that one open, which I think many people already know. I'm very long term on crypto. I've been in crypto since 2017 as an investor, a trader, as well as actually mined cryptocurrency as well with multiple GPU rigs. So I love my crypto. As much as people are hesitant on crypto at the moment, it actually has a lot of positive stuff going on. We broke this trend. I'd like to see it retake this trend. That being said, there's still a larger term cup and handle that's been going on, as well as a nice bull flag pattern on smaller time frame. If you're looking at this breakout here, that was a nice little inverse head and shoulders. It broke out cleanly, got a nice push with volume above that resistance level, and now it looks like we're going to bull flag again here. So I'd like to see, looks like we also have a nice little inverse head and shoulders going on there. So wouldn't surprise me if we push hard and shove above the 60k level. We could see a nice little run to 64k. I personally trade leverage crypto futures short and long that are leveraged on the shorter time frames, and then I use that to add to my longer term crypto holdings. So this is some key levels you can look for on Bitcoin in the range for those of you that are wanting to go long, or those of you that are wanting to tinker with leverage futures as well. For the sake of crypto, I'll jump over here to Ethereum as well. So Ethereum, if it can retake this support right here at around 2350, we should see a push up to this trend line at least. But all in all, same thing, right? Large cup and handle pattern going on larger time frame. As related to crypto as well, if you want to talk crypto tickers for those of you that are more into stocks, that coin here that is trying to catch its support here at the 145 level, and from there I'd be looking for a stronger push up. Got a beautiful cuff and handle going on with it as well. I'd like to see catch the bounce here in this zone again. If it breaks down here, we definitely could see sub 120. I think a lot of the uncertainty that's going on with crypto at the moment is related to the election, because Trump is very much pro crypto, Harris not sure. So yeah, I think that's where a lot of that uncertainty is coming from. But see, I think I'll wrap up this video. It's meant to just be a quick rough touch base on some of the given tickers. I can do ticker specific requests if anyone wants to drop a message either over on YouTube, or feel free to join our free Discord and you can come ask for a request on a video topic within the lounge. Be happy to put it together. But thanks for listening.